is being recorded.
Insert column for year. Okay, so the instruction was we have to bring in 2 additional columns between the date and particulars and also after amount. Somebody is telling me that I should introduce the year column. So I told you that this one here, you are supposed to use months. And I was very specific that we are going to use months in words. So we are going to use months and use it in words. So which formula are we going to use to help us get the months in words? Which formula are we going to use to help us get the months in words? Which formula are we going to use to help us get the months in words? Remember, this is a recap of what we covered yesterday. So I expect most of you to do the talking as I follow what you say. Which formula am I going to use? Months in words. Let me see what somebody is telling me. I'm going to use the text function. Okay. Insert column for year and mapping column. So that column for year, we are going to use months, and the additional column next to amount is mapping column. So let me follow that. We have mapping and also we have months. So somebody is also telling me that the formula which I am supposed to use to get the months in words is text function is equal to text. Click my tab button, pick the value, which is the date. Pick the value, which is the date. Then the next thing that I'm supposed to do is to now format it. Put comma, then my M, quotation mark, then put letter M 4 times to represent month. Then I close my bracket. If I do that, I will be able to get the months in words. Then I autofill. Having done that, what was our next step? What was the next thing that we did after inserting the months in the month column? What was the next thing that we did? Filters. Okay, we are supposed to insert filters. What was the shortcut which we used yesterday to insert the filters? What was the shortcut which we used yesterday to insert the filters? You simply hold Alt A T. Simply hold Alt T, having highlighted the titles. You simply hold Alt A T, and you've already inserted the filters. Having done that, next step. Somebody can recall what we did. Having filtered the titles, what are we supposed to do? Start mapping. Yes, grouping, which is now the mapping. I can only see 2 people talking. I believe we are moving together and no one is left behind. How about removing the filters? You do the same, Alt A T, and they will be removed. Follow the same procedure, Alt A T, having highlighted the titles, and you will see them disappearing. So we are going to start the mapping. So we come to particulars column, pick the first item. And as you know, this is like rentals. these people are having rentals, this company or this organization. So their main source of income is rental income. And therefore, that is what is going to be their revenue or sales. So we are looking for rent. If you see there, we have rent receivable and rental income. So rent receivable is an asset, and therefore we don't want it to be ticked. So we can proceed and say income, rental income, okay, to get it placed there. So which name are we going to give the rental income? It is revenue. So let's have revenue for uniformity purposes. Let's have revenue there. And autofill, Control E. So we have filtered out all rental incomes to be given a name of revenue. Having done that, what we're supposed to do, having mapped the revenue or the rental incomes and given it a name, revenue, what is going to be our next step? What are we going to do? So mapping for revenues, you move to particulars column and click the filter that you inserted, then it will give you a list of the items we are supposed to, or that are appearing in that column. Then in the search space, you type rental income, and all rental incomes will be ticked. Then you say, okay. If you do that, you will find that it is only rental incomes that have been filtered out for you. And therefore, in the mapping column, all those rental incomes are the revenue of that business. Having done that, you have already taken care of rental income as revenue. Your next move is to go back to the same particulars column. In the search space, our next item, we are going to pick all of them. So you can pick them in that order in which they are appearing there, or whichever format you are going to follow, but you should ensure that at the end of the day, you've been able to map everything that you have in column C. So the next item that you're going to map here, let's see, we have long-term loan, we have interest expense, operating expenses. So let's pick operating expense. Operating expenses, they appear there. So we call them, we can maintain the name. So let's say they are called operating expenses. So when you flash field revenue in our first step, the moment you type the first item of operating expenses, it automatically fills all of them. So having done that, move to the next item, which if I can see there, I have cash. It is only an item that has been ticked. I will maintain the name cash. I'm done with that. Move back to column C, pick corporate tax, call it taxes. It is already taken care of. Look for, I've been able to see debentures. Maintain the name, debentures. I believe we are moving together and not left behind. I believe we are moving together and no one is left behind. Is that so? I believe we are moving together and no one is left behind. That's good. So I've been able to pick the benches, move back again. I'm also able to see depreciation. So there's something that I did there intentionally. I have depreciation and I also have depreciation expense. The two have been ticked. So the difference is the same. Depreciation expense and depreciations are the same thing. So if the two have been ticked, I simply click OK, and all of them will be filtered there. So I want to use depreciation. That's what I want to use. So it is already taken care of. Move back again. I'm able to see interest expense. Interest expense, we just call it interest expense. Back to column C, I've been able to see flats. I've been able to see flats. So the flats here are our land and buildings. The flats here are our land and buildings. That's what we are going to use in the balance sheet. I've been able to see long-term loan. Long-term loan, we can maintain the name. We can maintain the name. I'm also able to see ordinary share capital. Ordinary share capital. Let's call it share capital. I'm also able to see rent receivable and trade payables. So rent receivable, is going to be our debtors. Rent receivable is going to be our debtors. I've also been able to see trade payables. Trade payable is going to be our creditors. Unless there's a question before we proceed. Unless there's a question before we proceed. It could be flashed. Control E, it does. Okay. Okay, what is our cost of sale? Cost of sale, we have combined it in the operating expenses. That's what I'm able to see in that information. We have operating expenses. It has been combined there. So if there's no any question, I believe you've been able to map all the items that you have there. So if, let's say, I was doing my mapping, but in the process, somebody interrupted me, so I don't know the item that I have mapped and those that I have not mapped. How will I identify this? It is very, very simple. I simply move to column C, click the filter key that we placed there, select all. If I select all, I will be able to see that any item that I've not mapped in column B or in column E will not be reflected. Any item that has not been mapped will not appear in column E. So let's try and see if my data has been fully mapped. So if I check the names of the items in column C and what we are going to use to refer to them in our financial statements. If I check, I've been able to map out everything. So it means I'm now good to move to the next step. I am now good to move to the next step. So before we move to the other stage, is there anyone who is having a problem concerning mapping? Is there anyone who is having a question concerning mapping? Hapo kwa month, you missed the formula. In the month, I think we covered it extensively yesterday. The formula that we are supposed to use, or what we used yesterday, is called text function. So how are you going to apply the text function? Simply activate your cell, then you say text, close the bracket. It will need you to provide the value. That value is the date in column A. The value which is required there is the date in column A. After value, you are expected now to format it in words. So for us to use the month in words, we are going to have our quotation, then type letter M 4 times. Close that quotation mark and you close your bracket. If you use this function, you will be able to get the months in words. If you use that function, you will be able to get the months in words. I believe that one is answered. Please return out to confirm that all has been mapped. Very simple. I have said, remember, you have done, you've mapped all items. Having mapped all the items, you are now supposed to move back to column C for the very last time, and that this time round you now select all. So when you select all, you will now be reflecting all the items that are in column C. You want to make them visible. You don't want to filter out any of them. So if you now select all, you are expected to see that all the items in column C have been covered in column E. Because remember, when you are going to do your sum ifs, you will be picking this column and getting the values that corresponds to them. So if there is any item that is in column C and has not been transferred or mapped in column E, the value of that item will not be part of the summation of the items in column E. So that is why we have mapping. Another thing that we also explained yesterday, you have businesses in different towns, and you've been recording your sales and indicating the name of the points of doing sales. So let's say if you have a business in Nairobi, in the 17 constituencies, and when you are doing your sales, you normally record revenue, then you write the name of the constituency. But this now, at the end of the year, you want to get the total revenue, irrespective of the place where you earned this revenue. So in that, the mapping will help you to do away with the point of sale. Your main interest will be revenue. So long as it has the word revenue, irrespective of the place where you earned it, you will have a common name of revenue. And in your income statement, you cannot indicate in the revenue column that you have revenue from this constituency, revenue from this constituency. Instead, you will have cumulative sum of all your revenues. So that is how mapping helps to do that simplification. Delina, I believe you've been sufficiently answered. Okay, so let's now proceed. Having done all that, we are now supposed to use some ifs to extract these items the way they have been arranged. So you will now create a new worksheet if you don't have. If you have, that's good. So you will create a new worksheet. Having created a new worksheet, move to data. So we are going to pick the whole of column E, copy it, and paste it in the new worksheet. Having done that, you paste it in the new worksheet. There's a lot of duplications there, so we want to do away with the duplicates. How do we do away with the duplicates? Both short formula and the long roots. If you can recall what you said in the duplicate, tell me through the chat box. Alt A M, not Alt plus M alone. It is Alt plus A plus M. Or somebody is going the long way. If somebody has moved to data, then below power pivot, we have remove duplicates. Having clicked that, you'll have the same menu. So both short and long route will give us, or will allow us to remove the duplicate. So Alt AM, the menu appears there. So you ensure that my data as headers is ticked. Then you say OK. Having done that, you will be able to see that all the duplicates have been removed and we are only remaining with the unique items. Now that we have extracted the items in column E, and another point of interest is in month. We want to get the revenues on monthly, or the financial statements on monthly basis. So our next point of interest is column B. So how are we going, which method are we going to use to help us identify the number of months in column B? Which method are we going to use to help us identify the number of months in column B? My filters covers the whole row. My filters covers the whole row. You highlighted the entire row instead of highlighting the titles. So just click the number of that row, then you say Alt A T to remove all those filters. Then you move back again, highlight only the titles, Alt A T. So what are you going to use to help us identify the number of months? Assuming that the whole of column the whole of that column is fully covered with information. Copy the month column and remove duplicates. When I copy the month column, this is what I'm getting. I'm not just getting the answer directly. This is the problem that I have. Let me show you. When I copy the month column and paste it somewhere here, this is what my data is giving me. I'm getting January all through. How many of us are the same? How many of us are getting January if they paste the month column to remove the duplicates? How many of us are getting the same month? That is, instead of giving us the different months that we are seeing in column B, some of us are getting January all through. I would like someone to go ahead and tell us what we have not done, which is making us to get January all through. Which step have we skipped? Which step have we skipped? Which is not helping us to get the months as they should be? We remove filter? No. Filter has nothing to do with that. Locking? No. Lock the column? No. Okay, you can lock the formula. That's a good idea. Paste special. Paste without formula. Okay, I can see those who are now able to see what we are missing. So when I was copying, I copied the formula, and if I highlight, it is referring to this empty cell or column instead of referring to column A. Therefore, this is what I need to do. So some people have told me, I've been able to see those who are doing practice when we say we go through the videos. Somebody's telling me that I lock the cell, and this is what they are referring to. When I was setting my formula in this column, I referred to column A. That is where we have A2. So for me not to change away from column A, I need to lock that column, and therefore I should place a $ before letter A. So if I do that and enter, this time around, if I copy and paste it normally the way we've been copying other ones without copying special, I will be able to get the actual months that are appearing in column B. Why is it now not giving us January all through? Let me edit and you see what is going on. If I edit, it is still referring to column A. So it means when I was setting my formula, I locked column A, that is A2. So even if I move to column N and copy the same, I will be able to get the same answer because I have locked that my formula will always refer to column A. That is step 1, which we did not cover yesterday, but good people who are doing research have been able to identify that. Another method is to copy the whole of that column B. And when you are now going to paste it, you just don't paste it the normal way. Instead, you go down there and say, we want to paste values. So when I take that, I will have my months reflected there. So either of the two methods will work out for you. Having done that, we now move again to the same step that we followed when we extracted the mapping column. So I move to data, then remove duplicates, or Alt-A-M. My data as headers. Then we say OK. So with that, I'll be able to see that I only have 4 months in my data. And that will now make my work to be easier by now coming to column B and saying that I have January, February, up to April. So I have January, February, March, and April. So are we all together up to that point? 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 I'm only able to see two people confirming that they are together with me. Are we together up to that point? Okay, so having done that, we are now going to change this one here to details. Let's change that one to details. Let's change that one to details. And now our next step is to now get the total. We want to get the total revenue, but in the month of January. Total revenue, but in the month of February, not just total revenue. So we have conditions that we have to meet. Now, my next question is, how many conditions do we have here? How many conditions do we have here? We need to recap. Years of classes are not shared. We have different content with the 14 videos. The same files are the ones that we've been using. So I would encourage you to make a lot of effort to attend the classes for you to benefit a lot. When we do it here like this, if you have any question, we'll be able to respond immediately and even get some ideas from your fellows who might have other options. So don't restrict yourself to videos alone. Don't stick yourself to videos alone. I am getting 2 Januaries. Which one are you referring to? Is it the new worksheet that you've created or the original data source? When filtering the months, you are getting 2 Januaries because you said it has headers. So the 1st January was picked as a title. The 1st January was picked as a title. So, okay, back to my question. Which formula or how many conditions do we have that we have to meet the total revenue amount? How many conditions are we supposed to meet here? How many conditions are supposed to meet here? Somebody is telling me 4 months and detail column. Okay, why do you group depreciation and depreciation expense together, yet they have different treatment? Depreciation expense is the wear and tear that we charge on the fixed assets. depreciation expenses or depreciation is also the same thing. Remember, it is not provision for depreciation or accumulated depreciation. Provision for depreciation is depreciations that have been charged in previous years and now have cumulative amount. So depreciation and depreciation expense are the same thing. Somebody said we have 12 conditions. No. We want to get the amount. And if you can see, the amount must be of a given item. And the amount must be of a given month. So how many conditions do we have? We only have 2 conditions. Our first condition is it must be of this month. Our second condition, it must be of a given item. So those are the conditions that we have. We only have those 2 conditions. So we are going to start. So activate your cell, then you say some ifs. Our sum range. You just click the name of the original data. So where are we going to get our sum range? Which column represents the sum range? Which column represents the sum range? Amount column. So you place your cursor in the first value, Control Shift, page down arrow to highlight the entire column where we have the amounts. Since that is a range, the moment you hear of the word range or array, then you should fully $reference it. So FN F4, comma. The next requirement in our formula is criteria range 1. So criteria range 1, which one are we going to pick first? Let's do the items in the row. The items in row number 1. So we have January, February, March, and April. Where do we find them in our original data? Where do we find January, February, up to April in our original data? We are getting it in month column. So we are supposed to pick the first month there, Control Shift, page down arrow, fully $referenced, comma. So we've picked the range where we have the months. And which specific month do we want to get? We want to get the month of January. As we are going to autofill our formula horizontally, it will be changing from, we want to maintain, that is the point of reference. So we will be moving from column B to column C, where we need the value for February, to column D, where we need the value for March, to column E, where we need the value for April. So in that horizontal movement, which item are these months returning? Are they returning column or row? Are they returning column or row? From January to April, are they sharing the same column or the same row? So they are sharing the same row. And the moment you see that they are sharing the same row, but they're not sharing the same column, then that is the point of reference. We must stick to it. How do we stick to that reference point that they are all sharing? It is a reference row, and we have to $reference that row. So remember, the letter represents the column, and the row is represented by a number or a figure. So we pick or we place the dollar sign before 1. So that one is taken care of. Our criteria number 2 range. I have revenue, I have depreciation, operating expenses. The items in column A are the criteria 2 items. So where do I find them in my original data? Which column am I going to pick? Which column am I going to pick? Present criteria 2 range. Mapping column. Somebody is also saying column C. Let me see what column C has. Column C has particulars. So if I check column C, I have rental income. I have ordinary share capital. So I want somebody to help me identify if rental income, which is in column C, is appearing in column A here. Do we have anything called rental income? We don't have anything in this column called rental income. When you are doing mapping, after you did the mapping and you copied and pasted in the new worksheet, the title of these items in column A was mapping. Where were we getting this mapping from? We got that mapping from column E. It is the items in column E that we copied and pasted in this other worksheet. So in short, I'm trying to, the other time I removed the word mapping and replaced it with details. It was intentional. When you replace it with details, when I could have left mapping here, it was very easy for you to say, we are going to pick mapping column. But when I removed it, some of you are now saying column C, which is not wrong. But remember, the items that we have in the new worksheet are those that are from column E. So our criteria 2 range is the mapping column. So place your cursor there, Control Shift, page down arrow, Fn, F4 to fully dollar reference that criteria range 2. Having inserted that, we now need criteria 2 itself. We place our cursor here. So when we have our formula here, you want to see what revenue as, you want to see what depreciation as, operating expenses, interest expenses. As I am mentioning those things, are they sharing the same column or the same row? As I am mentioning revenue, depreciation, operating expenses, the same row. Column. So since they are sharing the same column, which is column A, we are going to dollar reference our column, and therefore place a dollar sign before A. Before A to dollar reference your column. Having done that, we are through with setting our formula, since we only add 2 conditions. So I believe all of us are having the same formula, and now we want to autofill and get the values. So when you enter, you will be able to get the values, do it horizontally, and then you double click to get all of them filled up to the last item. So are we all having the same values on my screen? we've been able to generate, give it two brackets. Got 0 for January. There's a problem. Getting value error. Got 0 for March and April. So what's happening when you are formatting the date column? When you are formatting the date column, if you have problem with February, March, and April, then it means you did not correctly lock the reference columns and rows. That is why we are getting zeros. So as you are autofilling your formula horizontally or vertically, it is moving away from the reference point. So you are getting zeros. Number two, if you check the default setting in your laptop, the date, and what you have, you'll find that it is month that is coming first, date, then year. So when you rectify the error in the date, it automatically picked the month first and change it to date, and the date was now taken to be the month. So in your month column, there are some that are having errors. I believe that also could be another source of the problem which you have. Any other concern? Any other concern? Okay, let's complete some and see how to help you. First one, getting 0, that might be the problem. So you should go and change the default setting of your dates. You should go and change the default setting of your dates. I'm going to show you how to do that. I'm going to show you how to do that. So having done that, we must now separate the balance sheet item and the income statement item. So in our income statement, which item are going to place at the topmost part, having indicated the name of the company? Which item are we going to place at the topmost part, having indicated the name of the company? Revenue. So with what we have there, you simply insert new rows, Control Shift plus. You can even do that part. So the first thing that we have is revenue. Then we did not have cost of goods sold. Instead, it was combined to be part of operating expenses. So just type operating expenses and I will show you what to do. Operating expenses. So if you've done it correctly, let me do something here intentionally. Operating expenses, that's what we have. But now remove the last S. I want you to have operating expense. So when you now highlight the whole of revenue and double click, you will find that instead of giving you the values for operating expense, you are getting 0. Instead of getting the value of operating expenses, which is down here, 12,300, 5,400, your answer is giving you 0. Let's see the magic behind that. Let's see what is happening that. Let's come to our operating expense and add that S which we have just removed. Let's add letter S. You'll be able to see that it is now giving us the actual values that are the same as those for operating expenses that is down here. So that one tells you that some ifs is very, very sensitive to spelling. The moment you miss spelling, you'll not get the correct answer. So let's proceed. Having gotten operating expenses, since cost of goods have been combined there, we are going to have earnings before interest, taxes, and depreciation. So we are going to have that. Then below it, we are now going to have our depreciation. Of which another name of this is operating profit. So let's call it operating profit. Deduct your depreciation. So we used the name of the word depreciation, not depreciation expense. So it is very simple. Another way of getting the value of depreciation, having typed the name correctly, is this. Just pick any of these items that have the formula, the sum if formula, even this last one. Then you copy it and paste it in front of depreciation here. You'll be able to get the actual value for depreciation. Are we together? Are we together? Are we together before I proceed? We are using some ifs, not some if. I'm going to allow to share your screen in 2 minutes time. So having done that, let's now after inserting your depreciation, we are going to have earnings before interest and taxes. So we are going to have our earnings before interest and taxes, which is going to be equal to operating profit minus depreciation. Then we are going to have our interest eliminated. And in our statement, we had interest expenses. We had interest expense, that is what we have there. After interest expense, we are going to have earnings before taxes. Then below that, we now deduct taxes. Having deducted taxes, we are going to have earnings after taxes. Then we have retained earnings. Retained earnings brought down. And then we have retained. Carried down. So let's insert those and see how they work. Let's insert those. So if you want to get taxes because it was part of the items which we mapped, interest expense, we simply pick any of these items that have the formula, even down here, just pick any of them, even cash here, copy that, then paste it in front of interest expense. You'll be able to get the interest expense value. And also taxes there, you paste it there, you will be able to get the two values. So I believe you've all done that. So you are going to get operating profit, which is equal to revenue minus operating expense. This one is addition and subtraction. So that one I think is basic. Even if I move at a higher speed, you will still be good to go. So operating profit minus depreciation will give us EBIT. Then we take EBIT minus interest to give us earnings before taxes. When we deduct taxes, we are now going to get earnings after taxes or profit for the year. So let's mark these ones here, Alt Control. Then you highlight those items which are representing the summations or the net amounts. Then you say Control B. So we'll be able to get the values in bold. Are we at the same point? 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 Only two people are with me. I know all about the rest. How do we correct the date? To correct the date, you must change the default setting of your laptop. And before you change the default setting, you need to go back to the original date format. That is, whatever was separating your dates, the dots, you'll take them back. Having taken them back, we change the default setting in your laptop, and then you now proceed with the current procedure. So let me show you that for just a minute. To this other part. This is what you need to do.
This meeting is recorded.
So having done that, we've inserted the totals here until we are at earning after taxes. Now, if you check what we have here, we are supposed to link our income statement and the balance sheet. But before we link the two, let's set our balance sheet. So we are going to have the month of January here. Let's have the month of January there, up to April. So our first item in the balance sheet is going to be non-current assets. So our non-current asset, here we only add one, which is land and buildings. So we have land and buildings. We have land and buildings. And remember, it is recorded at cost. So we need to get accumulated depreciation. We need to get accumulated depreciation so that we can have the net book value. And since land and building was part of the items which we mapped, we simply pick any of them here, copy and paste it there to get the value of land and buildings, as simple as that. If you check, accumulated depreciation was not there when we were doing our mapping, but since we have depreciation, we can generate accumulated depreciation from our income statement. So that is the first step where we are going to link our balance sheet and the income statement when we are generating accumulated depreciation. So let's set it at that point. So what we only need to know is that net book value is equal to cost minus accumulated depreciation. So that's what we need to get. And since it is only one fixed asset that is there, it is going to be the total non-current assets. Total non-current assets is the same as net book value because we only have that single asset. So you simply say alt equal and pick the all of that value. So this one here will be in bold. After non-current assets, we will have our current assets. So I want you to help me identify the first current assets that we have here. The first current assets that we have, or the current assets that we have in our here. The current assets that we have, cash, debtors, any other? If you can see, they are appearing here. We have cash and debtors. Simply type them and the formula will automatically. So we have cash, then we have debtors. The moment you replace that depreciation with the debtors, the value changes because it was already set there. So when we bring in the formula there, we will also get the value of cash. And I believe they are the same. So when we add the two, we will be able to get total current assets. Total current assets is equal to summation of the two. Just highlight where you want to get the summation, then you say alt equal, and you are done with that. After total current assets, we are now going to have total assets. So our total assets is the summation of total non-current and total current assets. So it is just summation of the two, that is total non-current and total current assets. So having done that, you highlight the whole of it, do it that way. And remember, this one is going to be the balancing figure. So we can make it bold and even double underscore. So you move to borders, then there's that one that is top and below. So this one here will be the balancing figure with the items that are remaining below this point. So the next item that we need to have here is now total capital and liabilities. So under capital and liabilities, the first thing that you're supposed to have here is, the first item that you're supposed to have here is share capital, which is this. Just copy the name and you'll be able to see it, giving you the exact values for the share capital. So after share capital, we need to have retained earnings or reserves. So after share capital, we are supposed to have reserves. After share capital, we are supposed to have reserves. And one of the items that are going to fall under reserves is retained earnings, share premium, irredeemable preference shares if they are there. Those are part of the reserves. Revaluation reserves are going to fall under reserves. So in this case, what we are going to have here as reserve is only one item, and that is going to come from our income statement, which is retained earnings carried down. So this is what is going to be picked from our income statement. Retained earnings carried down is what we are going to bring here. Then we say equal to the value which is going to be under retained earnings carried down. So if we get total reserves and share capital, we are going to get shareholders' equity. So we are going to get shareholders' equity, which is summation of the two. So alt equal, then extend it to pick the whole of that. You enter. So when we get that, that's the shareholders' equity, which is also going to be part of the summations, which we are going to use. After that, we are now supposed to bring in the liabilities, of which our first liability is long-term liabilities. Our first long-term liability, as I'm able to see, is long loan. So we have long-term loan here. Just copy the name and bring it here. You will be able to get copy, then paste the formula. It automatically extracts that. Our next long-term liability is debentures. There are only those two. Then we say total long-term liabilities So our total long-term liabilities is summation of the two as equal below it. We are now going to have current liabilities. Current liabilities kindly mention the current liabilities that we have in our data. So in this case, we do not have accumulated depreciation. We don't have it, yes, but we are going to generate it. Current liabilities that are here. Current liabilities that are here. I can see somebody's mentioning creditors. Okay. So before I proceed, anyone who is lost somewhere there? Anyone who is lost? Asset, are we together? Okay, somebody is lost at shareholders equity. Shareholders equity, we add share capital, which we got when we did the sum if and mapping. That is already there. Then we are supposed to get retained earnings or profits to add. Whatever we are trying to do here is simply the function of balance sheet, that is assets is equal to capital plus liabilities. It is capital plus liabilities. So what we are doing here, it is appearing to be complex, but it is only the format that is different. So we could have decided to arrange all assets together, irrespective of long-term or short-term, and also group liabilities and capital together. When you compare the summation of the two groups, you will be able to get your balance sheet balancing. Assets, all assets put together should be able to give us the summation of capital and liabilities. And remember, these assets must be at their net amount. So that's why we have to eliminate accumulated depreciation. With capital, it also includes the profits that have not been distributed. So that's why we bring in the retained earnings in the capital side. Instead of having this title of capital and liabilities, we could have been having financed by to represent the same thing. So are we now, for those who are lost at Okay, we are going to that. We are that. So I've been told that our current liabilities is only one. Current liabilities is only one item, that is creditors. So I simply type creditors. I simply type creditors. And I will be able to get the value of creditors. So that is what we have as current liabilities, and we say total current liabilities that was what we have as total current liabilities. It is only one item. So highlight where we want to get the totals here, then you hold Alt equal. So total liabilities. Total liabilities is equal to total liabilities is equal to summation of current liability and long-term liability. So having placed the summation there, you will see what it is highlighting. We want to get total current liabilities, comma, and total long-term liabilities. If I add the two, I will be able to get total liabilities. So I want somebody to help me identify, based on what I've just explained up here, what am I going to add to my total liabilities to get the balancing figure? What am I going to add to my total liabilities to get the balancing figure? Keeping in mind that the function is assets is equal to capital plus liabilities. Keeping in mind that the function is assets is equal to capital plus liabilities. So somebody is telling me retained earnings, capital. Okay, I'm also able to see shareholders' equity. So what you need to do, if you check here, we are supposed to get capital. When you add capital to liabilities, then we will be able to get the same value as total assets. And in the capital and liabilities part here, capital consists of share capital and all other reserves. So when you add share capital plus retained earnings, you will be able to get shareholders' equity. So when you add shareholders' equity to total liabilities, you will be able to get a figure that is equal to total assets. And therefore, our total equity and liabilities, total equity and liabilities is equal to is equal to total liabilities and shareholders' equity. So having grouped the two together, that is summation of total liabilities and long-term and shareholders' equities, you'll be able to get the value of total equity and liabilities. So that is also the reference point that we need to get a balancing figure from. So we highlight all of it and then underscore. So what we have for total assets should be equal to total equities and liabilities. But is that the case with what we have here? Let's try and see. If we take total assets, subtract total equities and liabilities, we expect to get 0. But if you check what I have here, we don't have 0. So it confirms that our balance sheet is not balancing. It confirms that our balance sheet is not balancing. So is there someone who can tell us the items that are missing in our balance sheet to make it balance? Is there someone who can tell us the items that are missing in our balance sheet to make it balance? Retained earnings from P&L has not been captured. Accumulated depreciation is not subtracted. Yes, so those are the two items we're going to use now to link our income statement and our balance sheet. So I want us to be together because this is what you're going to do in your project. You are going to generate your own information. You come up with the dates column, the items that you are going to have there as an expense, the sources of revenue. Then you create income statement and balance sheet. And the reason why most of your balance sheets will not balance is because of the two items that I've left out. The reason why most of your balance sheets will not balance is because of the two items that I have left out. So let's now work on them together. How did you get shareholders' equity? Shareholders' equity is equal to share capital plus retained earnings. Shareholders' equity is equal to share capital plus retained earnings. So if you check it, my formula, it is giving us the summation of all the items in that range, but it should be shareholders' equity for that specific month plus the retained earnings or reserves. So the answer is equal to summation of shareholders' equity and the retained earnings or reserves. I believe that is what now you have from your side. For that, so let's work on those two items just left out intentionally. Let's now see how we can get these two items, the retained earnings brought down and carried down. So retained earnings brought down, is that profit that was left in the business, not distributed, not used. If you've paid all expenses, you've paid your taxes, and you've remained with some amount, even after paying the shareholders, and this amount has been retained in the business, then we call it retained earnings. So in the previous month, were we having retained earnings? Were we having retained earnings in the previous month? That is December 2020. Were we having retained earnings from our original information? Were we having retained earnings in this information that is provided here? The answer is no. So when I come here to the month of January, my retained earnings brought down will be 0. Because I did not have any from my original information here, then my retained earnings brought down will be 0. What about retained earnings carried down? Retained earnings carried down is now the remaining profit that has not been distributed. Instead, it has been retained in the business. How do we get that retained earnings carried down? It is the profit for the year plus retained earnings brought down. It is profit for the year plus retained earnings brought down. So my question is, what is our retained earnings carried down for the month of January? What's our retained earnings carried down for the month of January? How are you getting 36,550? Are you referring to the earning after tax? Or how have you arrived at 36,550? How have you arrived at 36,550? How have you arrived at 36,550? No, it is not earning after tax. No. The answer is correct, but it is not earning after tax. It is earning after tax plus retained earnings brought down. So retained earnings brought down is 0. That is why when you take 0 plus 36,550, you get 36,550, not picking the earning after tax directly. So it means for us to get retained earnings carried down, we will simply say the summation of these two items, earning after tax plus retained earnings brought down. Okay, in the month of February, what is the value of retained earnings brought down? In the month of February, what is the value of retained earnings brought down? And give a reason for that. Why are you giving us 36,550? Are you referring to the earnings after tax? Or are you referring to retained earnings carried down? And if yes, why? Okay, it is the opening balance. That's good. Carried down from January. That's good. Whatever we carried down, not distributed in the month of January, will now form the opening balance in the month of February, and therefore we simply refer to it. Having done that, we are through with retained earnings brought down and carried down. So our brought down will always be carried down of previous months, And that's why if we check for the month of April, it will be referring to carried down in the month of March. So if I do this, I'm seeing it is referring to this. And carried down is simply earning after taxes plus retained earnings brought down. So I simply autofill it to get the values, such that if I check here, it is giving me the summation of the two. Brought down for the month of March is carried down for the month of February. So that's what we have there. That one is complete. And therefore, if I now go to my balance sheet where I refer to the retained earnings carried down, I will be able to see these values appearing in my balance sheet. So if I check here, the same values have been picked from my income statement. So I've already linked my income statement and the balance sheet through retained earnings carried down. That is step number 1. Let's now move to the other item which we left out. Accumulated depreciation is gotten as a result of depreciation of previous years plus depreciation of the current year. It is depreciation of the previous years plus depreciation expense for the current year. So for the month of January, we are supposed to have accumulated depreciation from the month of December plus depreciation expense for the month of January. So my question is, were we having accumulated depreciation in our original information? Were we having accumulated depreciation? Were we having accumulated depreciation from our database? Were we having accumulated depreciation from our database? So the answer is no. And therefore, that one now tells us that accumulated depreciation for the month of January will just be depreciation expense for that month. But if we could have been having the depreciation, accumulated depreciation for the month of December, we could have taken that plus the depreciation expense for the month of January. And since it is not there, we will simply say equal to the depreciation expense in the month of January. So we've taken care of that. We have taken care of that. What about the month of February? What is going to be our accumulated depreciation? What's our accumulated depreciation? We are almost done. Don't worry about that. January and February. So, okay, another person. What is our accumulated depreciation for the month of February? What is our accumulated depreciation for the month of February? It is 1,000. So we are simply taking depreciation expense or accumulated depreciation from previous months, which is now January in this case. Then we are adding to depreciation expense for the month of February, which is 4,500. So our formula is taking the expense for that specific month and adding to accumulated depreciation from previous month to give us accumulated for that month. The same will apply to these other months. So we simply autofill them. Having done that, if you now come down to your formula here, which was helping you to know whether your balance sheet is balancing or not, we now have zeros for the 4 months, which means our total assets are now equal to total capital plus liabilities. So that's how we automate our balance sheet. And that's also how we link the balance sheet and the income statement. So we've linked them at 2 points, at retained earnings carried down and at depreciation expense to come up with the accumulated depreciation. So having done this, you can now even modify it to look professional. Just say Control T. You also come here, highlight the whole of this up to that part, then you say Control T. So that's how we prepare now the income statement and the balance sheet from the information that has been provided. So you can change even the appearance of the tables, can give them different colors. Just click any part of that. Then if you look at the top here, we have design. So you can pick the color or even the table format which you want for your financial statements. So that's what you do to prepare your automated income statement and balance sheet. Insert headers. Yes, you have headers there. So these are the ones that we have. So remember the name and the name of the company, the name of the financial statement you are preparing, and the date of preparation is very important. So those ones are the best. Those are the common things that you are supposed to put there, which does not need any formula. The one that required formulas, we've now done here. So that's how you prepare your income statement and your balance sheet. So start thinking on how you will generate all this information by yourself. Where you are not given the month column, you will be explaining how you are coming up with it. You generate your dates for the month of January to December of a given year. You come up with this information, you come up with the amounts, then you do your mapping and generate the month column here. Move to another sheet as you explain how you are generating these two financial statements, such that at the end of it, your balance sheet will be balancing. That's what you need to do. So you can start working on that project as you learn other concepts. It is basically about mapping and some ifs. If you understood those two concepts, you will be good to go. So unless there's a question, as I will be now allowing those people who had problems to share their screen and we see where they went wrong. That was for today. And the question that you'll be sharing your screen, then we are seeing where they went wrong. So that's all about some ifs, mapping, and preparation of financial statements. We've linked the two. So you will find that some people are having the correct answers. Yes, the balance sheet is balancing, but they have not linked them at accumulated depreciation point and also at retained earnings carried down point. If you have the correct thing and you've not linked the two, then you will be reducing your grade for that project. Ensure that all of those key areas are taken care of as you do the project. So let me stop sharing my screen, and those word issues can now share their screen. Right from date format, if you still have an issue, you can share your screen and rectify that. And that's enough for today. For those who have class, you can now just join, since I will not be covering any new concept.